Think DSCR loans protect you personally? Think again. Most investors assume, and I use assume, DSCR loans means safety from personal risk. Reality, you could be personally on the hook if the loan goes south. If your name is on the dotted line and you signed, don't stay blind. This episode is for you. So guys, this week, I want to go into DSCR loans a little bit deeper and talk about recourse versus non-recourse. And let me give you a little bit of a teaser. There are not very many, if at all, non-recourse DSCR loans. So let's jump right into it. When you're out looking for a DSCR loan, one of the first things you always talk about is what? Rate. Guess what? Rate shouldn't be the only thing you're talking about. You should be looking at whether the loan is recourse or non-recourse. Recourse means you're personally liable. So you can close the loan in your LLC and God forbid something goes wrong and you guys go past due on the mortgage and it goes to foreclosure. They're coming after you for any type of deficiency balance. And that deficiency balance will be the amount of what is owed on the property minus what they get for the property at the auction or however they determine to sell it is the amount that you're going to be on the hook for personally. Non-recourse, people think this means you're basically off the hook. Technically you are, and technically you're not. And by all means, I am not an attorney. I'm just talking to you as investor to investor. The lender can, in a non-recourse loan, go after the property. And if they choose so after the fact, they can actually sue you for the deficiency judgment. So people don't realize that non-recourse does have some exposure. Most lenders will not. They'll take the property, sell it, and write the rest of it off. On the 2008, 2009, 10 meltdown, a lot of lenders on personal homes were actually taking them back in a short sale. Even though there was a deficiency judgment, they just weren't suing people. It was just too much work. So they decided that they were just going to write it off to a bad debt. And if it was over a certain dollar amount at that time, then you could actually be taxed on that as income because it was a forgiven debt. Now, that time has changed. I don't know what that dollar amount is, nor do I want to get into that. That's not this video. I just want to say, when you're looking at a DSCR loan, you need to be making sure that you're checking under the hood to ensure that you understand that this is a non-recourse or a recourse loan. I would tell you 95% chance it's going to be a recourse loan. And if it is a non-recourse loan, ask them for the terms of the loan. Ask for the terms of the non-recourse so you can actually see the verbiage in your hand and understand what you're getting into. Otherwise, it just becomes a royal pain in the butt down the road. And I know I don't want to kick a can down the road, and I know you don't either. Another thing that's comes up in the DSCR world that a lot of people don't talk about is they call it a bad boy carve-out. And that basically means that you're circumventing the mortgage clause, the deed. And a good example of this is doing a transfer, a quick claim transfer of the deed to somebody else without money exchanging hands or it actually being notified to the lender, letting them know that the ownership has changed. That is part of the bad boy carve out. That can escalate the due on sale clause that all these loans have. So make sure if you're going to be creative with your financing, ensure that you are watching out for the things that potentially could get you in trouble. Another thing that falls into this, and make sure that you get the proper help. I'm all about getting help and support, is bookkeeping. Making sure you're tracking your monthly payments to your lender, making sure that you have to keep the coverage that you stated you had at the time of closing of this loan throughout the period of the actual mortgage. If you do not keep that coverage and it defaults, the lender has the right to take the property back, which means you are on the hook for that property. So you need to make sure that you're keeping up with your payments, you're keeping up with your homeowners, you're making sure that you're on point for your paperwork, you're organized. So if anything happens, you have everything documented. You don't lose protection for being evil. You lose it for being sloppy. And that is something we all can struggle with at times. And I know being sloppy means that we are busy, distracted, and we need to get back on our game. So please don't let that happen to you. Vet your loan and protect yourself. When I say vet your loan provider, your broker, ask those questions. If you're going to a credit union or a bank, vet your lender there. Make sure that you're asking for the recourse language. You know what it actually says and what you're going to sign for on the dotted line, and you're comfortable with it. Don't sign until you're comfortable. Ask lenders, how many DSCR loans have they done? Where are they at in this space? Is this just a lender that is jumping into the DSCR space and has never done one? Or is this somebody that's done 65, 70, 100 DSCR loans where they understand the process from start to finish? Only work with specialists that understand your deal. They understand DSCR. They understand the space. And I'm not going to go too technical, but I wanted to share a piece here. When you're buying a home for yourself as your primary residence, there are underwriting conditions for that type of loan. When you're buying an investment property and you're using a DSCR loan, there are different underwriting criteria there that you must know. If you have a lender, broker, credit union, that's all they do is conventional primary home buyers, and then they decide to do DSCR, it's going to be a nightmare. They're going to ask for personal documentation, your tax returns, your bank statements, which we'll ask for on DSCR too. Your DTI will be taken into effect. Your pay stubs will be taken into effect. So when you're in this space, guys, and you're trying to select a lender, figure out if they have the experience to fund a DSCR loan and they can get it done in a short period of time. Typically 2 to 3 weeks. If they're good, they should be able to close it out pretty quickly. The other piece in this area is this. If you're trying to get the most economical, or I'm just going to say it, cheap loan, I'm a lender broker. I want to get paid for my experience and my expertise, just like you do. If you go to a cheap alternative, which typically be a credit union or a bank, you're going to get stuck going conventional route with providing them all of your personal items, which means the loan will go on your credit bureau. So be wary of that. I'm not saying that they're not good deals. I'm not saying they can't do a good job. What I'm trying to tell you is you pay for experience and you pay for knowledge. And if you're a first-time investor, you're going to pay a little bit more when it comes to rate because you don't have enough experience under your belt. Lenders will work with you, but they're going to charge you more in interest rate, and they're more than likely going to have a prepayment penalty on the deal. So be aware of that. You can't build your future from shaky ground or lack of knowledge. You have to be able to spend the time to be able to understand the type of loan that you're taking out. This is not about one deal. This is about creating a legacy. It's creating a portfolio. But if you don't do enough homework and take enough time to understand exactly where you're at in this process and how DSCR loans can help or hurt you, then you're setting yourself up for failure. You can't protect your peace if you're unclear about the risks with DSCR loans. educating yourself, making sure you're asking questions. If your lender, broker, bank, credit union doesn't want to answer your questions, time to pack up your toys and go somewhere else. You need to be comfortable since you're going to be signing on the dotted line. Your name is your testimony. You need to guard it. So making sure that you're doing the right thing for yourself, for your business, and ultimately for those renters that are going to live in your property. Because if you're not setting yourself up for success, how are you going to provide a great place for them to live? One that's affordable, but is cash flowing for you. So please know what you're getting into, read the fine print, ask the questions, make sure you're educating yourself before you get into the space. It's not as easy as everyone portrays it. It can be done as long as you've got the down payment, you got the closing costs, you understand it's going to be a recourse loan, all good. But if you don't educate yourself and you fly by the seat of your pants, it will come bite you. And that's not something I want to do. Guys, I know this wasn't a very exciting video this week, but I wanted to share this because it is a key part of a DSCR loan that you need to know when you're signing on the dotted line. If you like what I am putting out to you guys, I am creating community. Please subscribe and share to these videos. I put a lot of time and effort. I'm growing. I'm putting it out there. I'm not afraid to be able to share these items with you guys, but I'm talking from my heart. I'm also talking from experience and what I've learned in this space. And one of the things I've learned in this space is a lot of people do drive-bys, but don't actually stop and get out of the car and understand what they're getting into. That will get you in trouble. So guys, have a great week. If you guys have questions, comments, please leave them on the video. Would love to be able to talk to you guys more. It's all about creating community, creating like people with like minds, but also better yet, sharing great ideas. Stay safe and stay healthy.